Friday, December 19th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, we're going to look at silver. Silver is continuing to defy the top callers, the haters, the naysayers. Yes, we almost touched 67 recently. Right now, we're approaching $66. And in Aussie dollars, for example, it's already traded above $100. We're going to look at what that means for the Australian dollar. Well, going forward and what has happened as well since, let's say, the late 60s there. And I'm going to reference an article as well by David Jensen, who I have had here on the channel many times. We even have a playlist, which I recommend. I'm going to put up here. He's talking about how there's a lot of backwardation in the silver market, which is a sign of shortage. Before we look into that, just want to talk a little bit about that CPI number that came out. It was expected at 3.1% year on year. That's an increase, right? Prices are still rising. And it came out, though, at 2.7. That's the US CPI. And in my 3 decades plus of following economic statistics, I've never seen one come out, a CPI, that is, annual CPI, come out so much better than expectations. Are the economists and analysts getting worse? Maybe a little bit, but I don't think many people buy this CPI number. You will note that the head of the BLS was replaced this past summer, because they had a really bad non-farm number. And Trump didn't like that, and he nominated a new guy. So you kind of wonder, and what makes me think that the market doesn't buy this CPI number and doesn't buy this mantra that inflation has been solved, the inflation problem, is the fact that when I look at the Treasury yield curve this morning, and it's about 8 a.m. London time, well, the 10-year yield is pretty much where it was before that CPI number. It's at 414. The 30-year as well is around 483. So keep an eye on long-term bond yields or treasury yields. I don't think the market buys this story that the inflation problem has been solved. It's anything but solved. So back to silver, and we're going to look at Australia first. And yes, the dollar has hit 100, $100 silver. Well, down under it is 100, and it's a bad sign for the Aussie dollar. Well, right now the price of silver in Aussie dollars has come back a little bit. It's at 99.55, just below 100. The high, though, a couple of days ago was 101.21, and I think that high, unfortunately, is going to be breached. Unfortunately for the Australian dollar, fortunately for my viewers in Australia, who are plentiful, who have been stacking, I'm happy for them, and I'm happy for all stackers all around the world, because this is it's a world problem. It's not just in Australia. And talking about silver being just below 100 right now, and seeing that you guys already won the Ashes before the end of the year, and for my American viewers, that's the traditional cricket rivalry match, test match between Australia and England. It's been going on for I don't know how long, and the England team is in Australia right now, and I think they've lost the 3rd test, and I think there's 5. I'm not sure. There used to be 6. Talking about the price of silver being just below 100 in Aussie dollars, there was a famous cricketer, the best batsman ever, Don Bradman, an Australian. Very interesting story. And most people remember him for that, not for the fact that he had a test match average of 99.94 runs, which is, in baseball terms, it's akin to having a 400 batting average, which no one's really achieved. I think Ty Cobb had a 367 average. But the interesting story about Don Bradman and his centuries are good kind of centuries, right? Not like the Aussie dollar in silver century. Yeah, most people, at least I remember, because I like sports history too, especially golf, but cricket history. On his last at-bat for Australia in his test career in 1948, so 77 years ago, at the Oval in London, he needed 4 runs to have a batting average of 100 for his test career. And I've looked here that the second highest batting average, well, the first after him is 62.66, so quite an amazing batsman. But what happened? Did he get the 4 runs? No, he was bowled out for a duck. What does that mean? For those of you who are not into cricket, well, he got 0 runs. He was bowled out, and he only needed 4, and his average is 99.94. So now back to silver in Aussie dollars. I got a very nice message from one of my Australian viewers, Sean. Thank you, Sean. And he told me that in 1966, Australia not only switched from sterling and pounds and shillings and pence to the dollar. They switched currencies, really, from calling their currencies the Australian sterling or Australian pounds to calling it the dollar, but they also decimalized their currency. They used to have 240 pence to the pound. They used to have shillings and sixpence and crowns, half crowns. So what he told me is that, in 1966, they minted a new silver coin, which I've looked at, as you can see here, and it was only minted in 66. They minted like 36.454 million, and it was 80% silver, and it had its weight, total weight is 13.28 grams, and the silver content is 10.62 grams. Interesting that they never minted anymore. I think they knew they were going to go off silver, but it must have circulated for a while, those coins. But what he told me, because we've done this exercise with the U.S., with the minimum wage, federal minimum wage in 64 being $1.25, it would be a lot higher today. He did the same for me, for Australia. So they switched from to decimal. So 2 shillings became 50 cents. And these 50-cent coins, as it says here, contain 10.6 grams of pure silver. And in 1966, the minimum legislated wage was 91 Aussie cents. So if you do the calculation, and I did the calculation at $100 per troy ounce, you get $62. The minimum wage would be if Australia had kept its silver coinage equivalent, right? But today the minimum wage is $24.95. So it goes to show, yes, why I said it's not a great kind of century for the Aussie worker, because it means that the Aussie dollar is getting trashed. And it's ironic because Australia is the land of plenty. It's got all the natural resources it needs and more. So it doesn't necessarily mean that the currency will be strong. Why is that? Well, because the government is mismanaging the currency. And unfortunately, Australia followed the United States and the rest of the world in abandoning gold and silver as a base for their monetary system. So that's what I wanted to say about Australia. And thank you, Sean. Back to the silver market. Yes, right now as I speak here, silver's at 65.80. It's up about 30 cents. That's the spot price. The high's been 66.04. We're still seeing a lot of slams in the price of silver, and I bet you that's got something to do with the bullion banks. But I'm hearing from my very good sources that central banks, especially non-Western central banks, are still buying a lot of silver. They're still buying a lot of gold as well. So yes, gold and silver, I feel, is still unloved or hated by the general public. They don't even know it's there and that it's doing well, nor the miners. I think it seems to me the only people who kind of appreciate the prospects for gold and silver are people like us, who are rabid sound money proponents, and also central bankers and very wealthy individuals that are not necessarily like sound money people, but they want to protect their wealth. So I think it's still early days, and according to David Jensen, the supply shortage is intensifying. He wrote something yesterday. I'm going to put it down in the description, a link. And he says, market signals of intensifying global silver shortage driving silver's price rapidly higher. So he says here, with silver's price up 120% in 2025, market observers might expect a price pullback as marginal new supply of metal from recycling or investors taking fiat currency profit is brought to market. However, silver's spot or cash price today is surging above the March 2026 futures price on the COMEX, CME COMEX New York market in what is called backwardation, right? Signaling a physical supply shortage in the market. So what does that mean? Well, usually the precious metals market is in contango. The spot price is lower than the futures price because of the cost of storage, the cost of carry, i.e. how much interest you're giving up by having silver or gold. So when it's in backwardation, it means that buyers of silver want the silver now. They don't want to buy it forward because they don't trust the sellers. They don't trust the market to have that physical silver. So they want it now, the physical. They can't wait. And so the spot price for let's say 1 or 2 days delivery becomes higher than the futures price, and that's called backwardation. That's a symptom of shortage and lack of faith and confidence in the supply. He says, with London Silver's implied lease rate tenors now generally ranging from 7% and 8% compared to -0.5% to +0.5% when physical demand is abundant, we can see a second confirmation of reported global shortage of this vital monetary safe haven and strategic metal. Yes, there's talk about Samsung. I spoke to John Little back in October. They have this solid state battery for EVs. It contains as much as a kilo of silver for each car. So can you imagine? And the range on these for these batteries is 600 to 900 miles, and it only takes something like 5 to 9 minutes to charge these cars. So this could be revolutionary. This solid state battery needs a lot of silver. I think it's coming online as a commercial thing in about a year or two. So it's getting very close. And we're hearing that Samsung is buying silver directly from mines. So David Jensen concludes in his article, what is the best option for the buyer of a pig in a poke silver contract? Well, the best option for an early mover is to sell his London cash spot contract and to scour world markets for physical silver, allowing immediate direct physical delivery. Because the scale of the pool of London cash contract holders is in the billions of ounces, the actual 2026 silver supply deficit estimated by Swiss bank UBS at 300 million ounces appears likely to be multiples of that level, as already intense buying of physical silver escalates due to this added demand factor. And he says, we may therefore not see any meaningful abatement in the rise of silver's price, even as chart watchers claim the silver is overbought. But a parabolic price increase amid a quickly intensifying global scramble for silver delivery. So I'm going to put, I have a playlist because I've interviewed David almost 10 times in the last 18 months or so. And he's been warning about this since then. And he's been spot on. Well done, David. So, yeah, what about gold? Well, gold's doing pretty well as well. We got up to very near the all-time high yesterday at 43.80. I think the high was 43.75. And then we came back down. But as I said, I think not just for silver, but for gold, it's still a hated sector, the precious metals sector. So that's why I think it's nowhere near being a top. I think it's not a matter of months or even a year until it tops and the bull market is over. I think we have years to go in this bull market. And why do I say that? Well, because the debt problem is intractable. There's no solution to it except to inflate away. And did you notice that not just the US CPI number came out a lot better than expected, but also the UK? It's kind of like the Juncker, Jean-Claude Juncker. He used to be a European commissioner, politician guy, who said something in reference to the sovereign debt crisis in 2010 to 2012 in Europe. He said there are times when you need to lie. Things are so serious that you need to lie. That's how I feel about all these CPI numbers coming out better than expected. But unfortunately for the people publishing and these numbers, and also the politicians pushing these people to publish these numbers, the bond market is not buying it. So there you go. With that, I'm going to wish you all a great weekend. Take care. Bye.